Good day, investors. On Tuesday, January 27th, Eastern Time, U.S. stocks saw sharp divergence, with the Nasdaq closing higher, driven by a strong semiconductor sector, while the Dow Jones Industrial Average slipped under pressure from healthcare and cyclical stocks, and the S&P 500 edged up in consolidation. Markets focused on the first day of the Fed's two-day rate-setting meeting, amid rising government shutdown risks and a flurry of key earnings reports, intensifying long-short gains. Key closing data showed clear divergence. The Dow Jones Industrial Average dropped 408.99 points, or 0.83%, to settle at 49,003.41, briefly falling below the 49,000 mark intraday. The Nasdaq Composite performed strongly, gaining 215.74 points, or 0.91%, to 23,817.10, a recent rebound high. The S&P 500 rose 28.39 points, or via 0.41%, to 6,978.60, fluctuating near previous highs. Capital flowed into growth sectors, with the Philadelphia Semiconductor Index surging 2.40%, up 16.55% year-to-date. Sectors showed a growth-strong, value-weak pattern. Tech stocks rallied across the board, with the Magnificent 7 Index up 1.11%. Amazon and Microsoft gained over 2%. Apple and Nvidia rose more than 1% as the AI industry chain maintained high prosperity. The semiconductor sector saw a broad rally. Coherent surged over 8%. Global Foundries and Lam Research gained over 7%. Micron Technology rose more than 5%. And Intel, ASML all climbed over 2%, driven by institutional optimism about AI hardware demand. The healthcare sector was the biggest drag, with United Health Group plunging over 19%, its largest daily drop in years. The company's Q4 revenue of $113.2 billion missed estimates, and it projected a 2% year-on-year revenue decline in 2026, the first annual contraction since 1989, weighing on the broader healthcare sector. In contrast, airline and auto stocks performed well. Boeing swung to Q4 profit with $23.95 billion in revenue-beating estimates, lifting its shares by 1.7%. General Motors exceeded earnings expectations, rising 9.2%. Multiple macro risks intertwined. The Fed's FOMC meeting kicked off officially, with 97.2% of markets expecting rates to stay unchanged in the 3.50%, 3.75% range. Shifting focus to Powell's press conference comments on independence and rate cut guidance. The U.S. January Consumer Confidence Index plummeted to 84.5, the lowest since May 2014, strengthening expectations for 2 rate cuts this year and restarting the steepening of the Treasury yield curve. Government shutdown risks intensified, with just days left until the January 31st deadline and no bipartisan consensus. Senate Democrats demanded stripping the DHS funding bill for renegotiation, while Republicans sought to advance a full package vote. The House recess further complicated talks, putting DHS, Pentagon, and other agencies at risk of funding lapses and fueling market volatility. Precious metals hit new highs, with institutions raising gold price forecasts to $6,000. Looking ahead to Wednesday, January 28th, Eastern Time, markets will focus on the Fed's rate decision and Powell's speech, likely trading sideways. Key watch points include: first, hints on rate cut timing in the policy statement and press conference. Second, progress in government shutdown negotiations to avoid sentiment-driven volatility. Third, tech earnings expectations and goals. New highs siphoning effect on safe haven flows. Strategically, focus on growth mainlines like semiconductors and the AI industry chain, deploying into tech leaders with beat earnings on dips. Hedge political and policy risks with gold stocks, and avoid sectors dragged by weak earnings like healthcare. Control positions ahead of the Fed decision. Powell's speech on policy path will be a watershed for short-term trends,